Okay, what is going on, CYPRX YouTubers? Welcome back to the CYPRX YouTube page. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. Also, you all, here is my Twitter handle. I've had a couple of people reach out to me and ask me what that is. Make sure that you all aren't following any spam accounts. My Twitter handle is detrimental. It is my only social media at this current moment in time. I told you all that we are going to create a motivational TikTok here in the future where there's not going to be any other posts except for motivational forex trading and cryptocurrency trading posts. I will let you guys know when that comes into full effect, but here is the Twitter handle if you all are interested in following me on Twitter. So today I'm going to break down for you all a GBP/JPY trade that we placed in the foreign exchange market here in the CYPRX group chat. As you guys can see from some of the screenshots from our Discord chat, a couple of the other students caught this trade. We have Brandon, we have Ashley, we have Asaf, we had Emiliano all looking at this trade. We also had Ari looking at this trade. Absolutely beautiful and outstanding, very active group chat. Most of the week we are catching moves in this market. However, coming into Q2 and Q3, I'm only looking to trade the foreign exchange market anywhere between 2 to maybe 1 day per week, all right? And I'm looking to do that on Tuesdays and Wednesdays only. So my trading is going to get a little bit limited when it comes to the foreign exchange markets, mainly because I have completely exposed my capital in the first quarter of this year, and I have ran up my capital over 25%. And so I'm just going to kind of take a breather and not be aggressive in the foreign exchange market in Q2 and Q3, just kind of take a break and only trade once to twice per week. So in this trade breakdown, I'm going to go over a beautiful risk reward ratio that is currently floating in profit of a 1-to-5 risk reward ratio. As you guys saw in the screenshots, many other students caught this trade. I'm not going to give you guys all the fruits and nuts surrounding the trade breakdown, but I'm going to give you guys as much as I possibly can to give you all some clarity on what the market makers are actively doing, trading against retail methodologies. Again, if you're trading retail methodologies and you're constantly losing in this market, you need to wake up and realize and understand that the banking institutions do not trade that way. Again, I've told you all, we have a banking institutional trader, a person that works for a bank in the CYPRX trading community that has confirmed all the methodologies that I teach, right? That the banking institutions only place trades from these psychological levels over here. They're not taking trades off TradingView with order blocks and Wycovian methodologies and all that jazz, right? They're not using indicators. They're not using support resistance methodologies. No. They are placing trades based off of where liquidity in the market lies in order to capitalize on making money themselves and placing trades from A to B utilizing psychological levels. So utilizing a little bit of the information that I teach here on the YouTube, how can you guys capitalize on moves? Well, beautiful risk reward ratio on GBP/JPY, looking for this to potentially retrace into a discounted region and then take back off to the upside to come into the overall bullish target of 16200. For this to potentially retrace into a discounted region and then take back off to the upside to come into the overall bullish target of 16200. Let's see if that comes into fruition. Let's see if that comes into fruition during this recording. And if not, and this trade gets liquidated, then oh well, the stops are moved to break even and we've already taken partials on this trade, okay? So let's see how this trade plays out whilst we are on the live trade breakdown, okay? So here we can see London session, right? We always want to analyze a couple sessions beforehand, but I'm not going to go into extreme detail on the previous sessions. Let's just focus on the previous London session. So we can see here during the manipulation, I had explained to you guys that prior to every single session, right, there is a manipulation window. Okay, and if you guys don't know what that manipulation window is by now, watching the previous YouTube videos, make sure that you go back and check that stuff out. But we can see here, as soon as the London manipulation region ended, we can see what the banking institutions did. They left behind retail money in the form of trendline liquidity to the downside, or a buy side trendline liquidity, right? Where we can imagine people were attempting to buy this little tiny trendline right here. We can see that the banking institutions right out of the manipulation window came to attack what? They came to attack buy stops and people who were selling in the manipulation window ahead of time, right? We can see here, retail traders were attempting to guess a top here. They were most likely selling this bearish candlestick right here. And then they were also most likely selling this bearish price action here based off of some resistance ideology, okay? And the market makers knew that they came and liquidated all those positions and activated buy stops. Once they activated buy stops and put people in profit for buy positions, what did they do? They enticed more people to buy at these lows by creating trendline liquidity liquidity. Okay, as you guys can see, there's a touch here, touch here, touch here. You can go and read this on Baby Pips, where it literally says the third touch of a trend line is the strongest area of a trend line to buy from. Well, look at this, okay? Here's the third touch of a trend line, a little tiny fake out right here in this bullish candlestick, and then boom. The market makers do what? They come and they liquidate any people who had leveraged buy positions right here beneath these lows, okay? But what do they also do? They activate sell stops beneath these lows in the form of retail support, okay? People who are willing to sell at these lows. So now we see a perfect example of a retail trap where now we have the market makers liquidating what? We have the market makers liquidating trendline liquidity and leaving behind more trendline liquidity. Now we can go ahead and we can change this like this, all right? We can see that the market makers were doing what? They were leaving behind a trail of trendline liquidity because they know that people like to sell at these highs. So we can see people were attempting to sell these highs, sell these highs, sell these highs. But what was the market telling us? Okay, if you guys are confused at this point, what now is the market telling us it wants to do? Let's pay attention to actual price action. As you guys can see, it consistently shows us the willingness to grab liquidity from lows and run higher, creating higher highs, higher low formations, grabbing internal liquidity from lows. Again, look at this. Okay, we see a low that is set right here. The market grabs that liquidity beneath the low and runs higher. Same thing here. Okay, what do we see? We see that the market grabs liquidity beneath lows and runs higher. Okay, so over and over and over again during this London session, the market is telling us that it consistently is setting up traps to the downside, grabbing that liquidity and running higher to make fresh highs, leaving behind trendline liquidity or retail resistance liquidity. So coming into New York session, we understood all of this price action information. And again, people say hindsight testing is rubbish. Why? Why is hindsight testing rubbish? Because coming into this New York session, we would have had all of this price action to analyze, right? So hindsight testing is not rubbish, guys. If somebody is telling you that hindsight testing is rubbish, they're most likely not a profitable trader, because to become a profitable trader, you must hindsight test these markets over and over and over and over again until your brain is trained to see these patterns and these ideologies in the form of liquidity, psychological levels, which we're not going to get into detail into this breakdown, but we can see just, focusing on psychological levels, we can see that the market respected the 100 level in this general vicinity. Okay, we'll go ahead and put that on for you all just to show you all that these banking institutions are taking trades from psychological levels. We can see that they put an order in at 161.100. We can see that they filled another order in at 161.100, and they filled a third order in during London session at 161.100. Now, I told you guys that what? Banking institutions usually like to take two main positions during their what? During their trading session. Look at this. Here's one trading position at the 161.100 level, and here is another trading position at the 161.100 level, okay? Two main positions, and the rest of price action pretty much was just manipulation, right? So proving to you guys the theories and the methodologies that we teach, coming into this New York session, we had all this price action information. Let me delete this alert real fast. I'm just waiting for a pullback to see if I can get a second entry on this move. All right, but anyways, so coming into this New York session real fast, what do we see? We see consolidation. What is consolidation in the market? It is a liquidity trap, where the market makers building liquidity above and below price action. We can see in this manipulation region what is filled at the top of this price action here. What is here? Retail resistance, or people who are willing to sell from these highs or buy in the form of buy stops above these highs if price comes into these general regions. So we can utilize these areas as target regions or take profit areas if we're looking to place buy positions during New York session, right? That's an ideology, okay? So let's keep that in mind. Coming out of the manipulation region, what can we see price action did? Look at this accuracy. Again, paying attention to the ideology that the market makers are consistently showing us a willingness to grab liquidity from previous lows and then break previous market structure and run higher. Okay, this is the pattern that we're looking for. And would you guys look at that? Does that not look eerily familiar? Okay, look at this price action. We see that the market out of the manipulation window comes and grabs liquidity to the downside, reverses off of psychological levels. Okay, look to the right hand side. We can see the psychological level 161.250. Okay, what do we see? We see that these are what? Equal lows or retail supportive regions. Okay, and it happens to fall in what? The manipulation window. That is why we're focused in on this price action. What else can we see in this general vicinity or this manipulation window? Trend line liquidity. Would you look at that? Okay, so the banking institutions know that retail traders are involved in this market and trading these methodologies. So we see right out of the gate, the market makers come, they grab that liquidity. We have a bullish reversal, a match of bullish momentum, and then we fail to create a new market structure lower low. What do we do instead? Again, paying attention to fractal structure, we see the market print equal lows right here. Look at this accuracy, guys. We see the market print equal lows, grab liquidity, print a bullish candlestick, and show us the willingness to go higher. So right here on this bullish candlestick, once we dropped lower, we failed to break that previous low. All I did was I took my Fibonacci from the low to the high, extended that over. You guys can see the Fibonacci retracement of 70 to 79% where the banking institutions like to purchase at discount, and boom, we had a rally higher coming into almost a 200% Fibonacci extension. Absolutely outstanding trade. You guys saw that a lot of the other traders in the CYPRX community caught this same exact trade, so I must be doing something right when it comes to mentoring. Okay, blessings to you guys all. If you all like this video breakdown and you like all of the other video breakdowns on the CYPRX YouTube, make sure that you guys are subscribed to the YouTube channel. It does help this page grow. In the next video breakdown, I will go over some cryptocurrency trades that I'm currently floating in, and also go over some dollar cost averaging trades that I have placed on coins like Casper, HBAR, and XLM. Be cognizant, be aware, and I'll see you guys in the next video breakdown.